Yeah. So today's topic is contribution in business. Okay. So when I talk about contribution, as a business or as a firm, you would have made a product. The product you make would have cost. And when the cost is being incurred, at the end of it all, you have to sell that product, right? So for contribution, what happens with contribution? Contribution is part of your variable cost. So it means that for the product to be finally sold, it would have had the variable cost, the fixed cost, and the total revenue. That means you have sold the product. So how does contribution take place? Or what makes contribution part of your total revenue? So what is contribution itself? Contribution is the amount that when you are able to meet up with your variable cost, the amount of money that your variable cost is after selling is your contribution. So if your variable cost is 10,000, so if your variable cost, for example, let's say your variable cost is 500. So as soon as you reach 500 in the course of you selling that product, then what is left is your contribution. So contribution, that money, which we call contribution, is part of our fixed cost and profit. So it means that you'd have taken away your variable cost. So the amount that is left is your contribution. So contribution makes up with what? Your fixed cost, which is FC, and your profit. Do you get what contribution is now? Okay, here I wrote, this is the amount of money left over from a sale after variable costs have been subtracted from revenue. So you've sold the product. Then the amount of money, when you take it from the sales now, you take away your variable cost. The amount of money left is your contribution. Is contribution clear?
Yes.
So as soon as you cover your variable cost from sales, the amount of money left over, that money is what we call contribution. So it makes up with your fixed cost and your profit. Do you have any question about that?
No.
So we have two types of contribution. We have unit contribution and we have total contribution. So for the unit contribution, what does your unit contribution mean? It is just your selling price minus your variable cost, your SP minus your VC. That is the formula for your unit contribution. So in the exams, they might ask you what is unit contribution. When you write the formula, you get the full mark also. So unit contribution is what? Selling price, that's SP minus your variable cost per unit. Variable cost per unit. So here I wrote the amount of money left over from the sales of a single unit after variable costs have been covered is your unit contribution. Then for total contribution, it is the amount of money left from the sales of several units after the variable cost has been covered. That's the difference. For your unit contribution, it is SP minus VC per unit. Then for your total contribution, it is your unit contribution sold multiplied by the number of units sold. The unit contribution, you get your unit contribution from what? Selling price minus VC. SP minus VC gives you your unit contribution. So whatever you get, you multiply with the units sold. Maybe you sold 100 units. So it will be SP minus VC multiplied by 100. That gives you your total contribution. And another formula for total contribution is, I think I wrote, total revenue minus your total variable cost. So you have two formulas for total contribution. We have unit contribution, which is SP minus VC, multiplied by the number of units sold. That means you sold 100 units. That's total contribution. And another formula is total revenue minus your total variable cost. So how do you get your total revenue? Your total revenue is price multiplied by the quantity sold. If the price of a unit is 15, so you are selling 100 units, that is your PQ, that is your total revenue. Then your total variable cost is what? The variable cost per unit multiplied by the 100 units. Do you get the difference here? Yeah. You have the 100 units sold. So to get your total revenue, it will be P multiplied by Q. That means 15, the selling price is 15, multiplied by the quantity sold, which is 100 units. That's for total revenue. Then for your total variable cost, it is your variable cost per unit multiplied by the same unit sold. So if your variable cost per unit is 10, multiplied by 100, that is your total variable cost. Is it clear? Yeah. So here we talked about contribution, which is what? The amount of money left when you have covered your variable cost. I think it's clear. Mm-hmm. It's clear, right? Yes. Then your unit contribution, which I explained already, which is selling price minus your variable cost. How do you get your selling price? That means the selling price per unit of the product, and your variable cost, the variable cost per unit of the product. Then for a total contribution, it is your total revenue minus your total variable cost. And how do you get your total variable cost? It is your variable cost per unit multiplied by the units sold. I think it's clear. So look at the activity here. They said in the Republic of Gambia, please read it.
In the Republic of Gambia, around the 3/4 of the population rely on agriculture for their livelihood.
In essence, their means of
earning money in order to live. The Joe family rent some land and grow peanuts. Bags of peanuts are sold in a local market for
15 GMD. Okay.
The variable cost of 1 kilogram bag are estimated to be
10 GMD,
10
right?
GMD.
Okay.
In October 2018, Hamza Joe sold 210 of peanuts at the local market.
So that's the unit sold is 210.
Yeah.
Okay. And what else there? They said bags of peanuts is being sold for 15 GMD, right?
Yeah.
So now the first question says, let's go down. Yeah, explain what is meant by contribution. I already told you what contribution is. It's the amount of left from your sales whenever you've taken away, when you cover up with your variable cost.
Yeah.
I think that is clear. So the second question says we should calculate the unit of contribution. The unit contribution is what? Here we have unit contribution is
selling price
minus variable cost. So the unit
5 times.
No. Selling price is 15.
15
minus 10. Yeah. That's your unit contribution.
5.
That's 5 GMD. Yeah. Great. Then for your total contribution, it is unit contribution sold multiplied by the number of units sold. So what's the unit contribution? 5 GMD
5
multiplied by 210. So it gives us 1,050. And the other formula is total contribution, which is total revenue minus total variable cost. When we do it, it's going to give us the same as 1,050. So let's check. We have total revenue, price multiplied by quantity. Price is 15 multiplied by quantity. That's 15 multiplied by 210. That gives us 3,150. That is our PQ, 3,150. Yeah, minus your total variable cost. How do you get your total variable cost? Your total variable cost is the variable cost per unit, which is 10, right? Which is 10 here. Can you see it there?
Yeah.
It's 10 multiplied by the unit sold, which is 210. It gives you 2,100, right? 10 multiplied by 210 is 2,100. So the PQ, the total revenue, which is 3,150 minus 2,100. What does it give you? 3,150 minus 2,100. It gives you 1,050.
You're saying the numbers fast.
Yeah, it gives 1,050, right?
Yeah.
So that means either you use unit contribution sold multiplied by number of units sold, or you use total revenue minus your total variable cost. You're going to get the same. Do you have any question about that?
Yeah.
So that's all about contribution. Then we'll go to the nature of contribution and its calculation. But I have a question for you now. I will send it to you. Okay.